Srinivas Rao joins us now. Let's connect with him to understand the construct of the market, how he feels that interest rates and the macros are moving. Srini, good morning. Thank you for joining us. Srina, let's address something which has come more like a bolt out of the blue for all of us. The amendment to the new tax bill. Now, what we're debating from the morning, what it means for fixed income investor and for the debt mutual fund schemes. Will debt schemes see a significant amount of slowdown or outflows after the new rules which will be applicable from 1st of Jan 2014?
Good morning, Nikhil. Thanks for having me here. Yes, I think this is a bolt out of blue, a surprise for us in terms of what has come. But Nikunj, also I think what one has to remember is, and it is a negative, there is no doubt about it. But I think what one also need to remember, if you see what has happened in the budget to the insurance sector, so they were making representation that it should be on par with at least the mutual fund debt schemes. So I think post the changes that have happened in insurance, so there was so insurance become relatively less attractive, and maybe we were expecting more flows into debt, and instead of that, we have this negative news, which is going to be a dampener for debt funds for sure.
So, net, if debt schemes will see more inflows, could that have an impact on the entire corporate bond market, on NBFCs, at the wholesale borrowing per se?
Overall, mutual funds are playing a relatively lower role in corporate bonds. I think given the focus of regulator on focusing on AAA or super high quality, I think to that extent, mutual funds have not played as much of a role that one wants to play in the corporate bond. So I think to that extent, even this is not so much important.
Markets. We've come on the right side of the Fed event. Commodity prices are down. Rupee is stable. The macro headwinds are receding. But markets are not capturing that. If you ask anybody why markets are down, it is because of macro concerns. The macro concerns are getting addressed. The Adani fiasco is behind us. So if the concerns are getting addressed, why markets are not reacting to that? Why markets are not capturing that?
Yeah, Nikunj, I think it's a function of both in terms of what is happening globally and also what is happening in India. So when it comes to India, I think many things are getting addressed and things are in a fairly good position. But at the same time, Nikunj, if you see the last quarter results, I think there was a bit of a surprise or a shock for us on the earnings front. And quite a few sectors have seen a sudden slowdown in their revenues and profitability. So that was a bit shaken by the market. So one hand, we no longer have as much confidence on earnings growth that we used to have, let's say 2-3 months back. So that is putting some bit of a pressure. And add to the fact that we've seen a steady outflow from FIs, and when you see this kind of a global news where financial sector per se seems to be in a fair bit of a turmoil, and in India, financial is the largest weight. So to that extent, I think market is grappling or struggling to find its feet in terms of why should market move immediately when you have A, global concern, and B, within India also. Earnings growth visibility seems to have taken a hit at least right now, Nikunj.
Srinivas, I'm just looking at your recent opinion, and you've talked about as to how pharma is one of the preferred sectors along with banks. Banks, I get, yes, but why pharma? Is that a contract call, or do you genuinely see merit in this sector right now?
I would say pharma is a defensive bet. I think when I'm seeing so many uncertainties all around, pharma is relatively insulated from these uncertainties, where whatever happens in globally and domestic, the demand for pharma per se is relatively insulated. That to that extent, it makes it defensive. The second is also, I think if you see pharma has, let's say, 3 drivers, domestic, US and other markets. And within that, US has been a little bit challenging for last 2-3 years, given the kind of pressure they've seen in pricing. But our sense suggests that there is a clear improvement in US markets. So I think companies catering to US would see a decent growth in the coming quarter. So that also makes me to be more positive on pharma at this point of time, Aisha.
Morning. Just wanted to also understand what the key triggers are for picking out the domestic consumption space as a whole. Are there not worries about the looming inflation rate as well being a bit of a dampener for the sector going down the line?
Yes, I think consumption is a secular story in India, but at the same time, stock picking is very important, and quite a few stocks are fairly expensive. To that extent, I think stock picking is very important within the consumption space. So I am more comfortable with names where even the valuations are more palatable. Let's say less than 30, 35 times rather than paying 50 times plus. So theme is great, and I think yes, we are seeing in some pockets slowdown, but I think if it's a matter of 1 or 2 quarters, we have to live with it and look beyond that. I think to that extent, I'm fairly positive on the consumption story. I think the discretionary space also is looking extremely good. But I think stock picking is very important there at this point of time, given pockets of slowdown and also expensive valuations in certain stocks.
So let's delve a little bit deeper into that, Srinivas. Where within the consumption space, considering how large it is, do you actually find value right now?
I think auto is one space we are positive right now. And also, I would say certain staples, I will not put all of them, but I think large liquid, but also diversified places where I think there is a value at this point of time.
Autos are a deeply cyclical sector, and frankly, we've seen that in last couple of years that you have to time your entry and exit in autos. Why are you looking at autos for a sector which in a sense has cyclical bent?
Because I would say within autos, we like to see two-wheelers, cars and commercial vehicles as the three separate categories. And you're right in terms of saying that CV, commercial vehicle, is extremely cyclical, and the other two are not so cyclical. And we are right now more positive on the passenger car segment. I think that's where we are clearly seeing. I mean, today, if you see, it has become an aspiration of every middle-class Indian to own a car if he's not already owning. So from a two-wheeler to four-wheeler, I think that trend is very visible. And also, I think market has consolidated. So I'm more positive on the PV within this three segments, Nikunj.
How real to your mind is this entire EV, EV opportunity for listed players?
I think if you are looking at next 1, 2, 3 years, I don't think it is not real. But market is not just looking at the absolute number. Market is always looking at trend. To that extent, one can clearly see a shift towards EV, both in three-wheelers, two-wheelers, and passenger cars. Though it is very, very small right now. But I think when we are paying a price and price to earnings of 25, 30 times to these companies. So what are we saying? We are not just saying for the current earnings, but we are also paying for the future earnings. So in that extent, if EV or a hybrid is future, if a company is not present in that segment, I think we will see a PE contraction. And similarly, if a company is making a lot of investments and moves to see that they are present in the future upcoming area like EV, those companies will trade at a premium. So to that extent, when it comes to price to earnings, I think EV is important, but thinking that they will contribute meaningfully or anywhere near meaningful in the next 1, 2, 3 years, I think we are very, very far from that.
Okay. When you say you like consumption, what do you like within consumption?
So as I said, the current GDP we are closer to $2,000. And from here, when you move up GDP, we will actually see people spending more on the discretionary. I think the food, the basics are taken care. You will spend more on travel. You will spend more on education. You will spend more on health. So I think this is where we will see incremental income that people earn would spend on. And that's what we are positive. Let's say one space is hotels, travel. I think these are the areas where we will see a higher than a normal GDP growth in terms of their own upline as well as earnings, Nikunj.
Appreciate your time. Thanks so much for joining in and giving us your take on the markets as well as your outlook on individual sectors.